Hey, Angelo here, Director of Lambros Realty, and here I am with the February 2022 Cherrybrook Property Market Update. So there's quite a bit to get through, and just to give you a bit of a background on what I'll cover today is, a lot of you have been asking me, has the property market cooled, and what impact do I believe the current Russian-Ukraine situation, the current Russian-Ukraine situation will have on the Australian economy and I guess the localized Cherrybrook property market here. So I'll get into it. So let's, as usual, I'll go straight into the registered sales figures, and I'll basically assess things as we go along, and key indicators and measures that show how the market's performing. So if we have a look at the registered home sales for February of 2022, there were 7. The median price amongst those 7 properties was sitting at 2.4 million. The highest sale recorded was $2,850,500, and the average days on market is sitting at 25 at present. Now, if we draw a comparison back to February 2021, there was a whopping 17 registered home sales, so more than double. The median was sitting at 1,860,000. The highest sale result recorded was 2,316,000. And the average days on market were sitting at 20, so moving along quite quickly. So if we have a look, the registered home sales are down by 10 in comparison to February 2021, and up 4 sales from January of this year. Now, that's to be expected because typically January is a very slow start in Cherrybrook. A lot of people, that's obviously, they're on holidays, kids are at home, going away. So that's to be expected. No surprises there. Now, when we look at the median price for home sales, it's up 29% from this time last year. Now, the median price is only up from 18% if we look at January 2022. And I know that's a big only, 18%, still quite significant. But basically looking at the data behind that, I mean, if you're looking at that, you think, oh, yeah, it's still performing quite well, and it's still strong. There's no two ways about it. But keeping in mind that the transition from January 21 to February 21, if we look at the median price growth, was 23%. So it was 5% higher than where we're currently sitting at present, right? So again, that's an indicator to me that shows that things have, the heat has come out of the market, no surprises there. Another thing to take into consideration is the average days on market. So if we have a look at the average days on market, they decreased from 30 as of January 2022 to now sitting at 25. However, it is worth noting that there were homes that were still on the market from December 21 and November, in the year earlier, which are naturally going to increase the average days on market because Christmas closures, solicitors, conveyancers not operating, properties not exchanging, it is going to distort that figure. So that's something worth keeping in mind. So, take that out of the equation. It could have very well been at the very least 25 days on market, maybe 23, 24, thereabouts. So something to consider. Now, how do we compare this to how days on market were tracking in February 21? There were average days on market, which I touched on earlier, were 20 days with 17 home sales and a median price growth, a massive median jump from January 21 to February 21 of 23%. So every box was being ticked as far as here comes the boom, right? Like sales volumes were performing, median price was performing, and average days on market were performing. So another key indicator that shows me again that just looking at days on market, that things have well and truly cooled. The other thing as well that I'd like to point out too is the current data seems to indicate that if we look at the market in November 2021, and it had recorded a 4.1% decline to that of October 2021 when I was, assessing how things were tracking here in Cherrybrook. So you could see that things were slowly starting to come off the boil, late last year. And obviously it was too premature to tell early in the year as to what was going to happen. It could have just been people winding down for Christmas, which can happen. But I think now the data that's coming out is just quite conclusive. Auction results for February 2022. So 14 registered auctions in total. And for those of you that are tuning in for the first time, I just want to clearly point out that, you're like, well, how'd you get 7 registered home sales? Now you're telling me 14 registered auctions. That's because, to not distort the data, and I take duplexes, townhouses out of the equation when I'm looking at the median sale price to try and make it as accurate as possible. So that's just to clarify that there. So for the month of February, last month, there were 14 registered auctions, 6 of which had sold at auction, 3 had sold prior, and 5 had passed in. Okay, so that gives us a total auction clearance rate of 43%. And if you include those that had sold prior and at auction, that gives us a total of 64%. So again, another sort of underlying, an underlying measure that's starting to show that things have slowly started to cool down as well. Now, when we look at the stock levels, this is the interesting one. When there's on average around 25 homes listed for sale in a relatively inline property market, I should say, it keeps things balanced, right? Where it starts to show you again that things have started to cool. An increase in stock levels means that they're not flying off the shelf as quickly as they once were. So obviously, as of the recording, so I had a look at how many homes were listed for sale in Cherrybrook today's I did that yesterday on Thursday, the 3rd of March, and there were 22 homes currently listed for sale in Cherrybrook. Now, again, not including townhouses, duplexes, you add those into the equation, you're going to be 30 plus. So on average, when we're talking homes, the tipping point starts to become 25 homes or thereabouts, and we're very much heading closer to that. And you can see the sales volumes, the ratio of sales volumes in comparison to those that are listing are slowly starting to wane and taper off. So, this is 9 listings up from the data I recorded on Friday, the 4th of February. And to be honest, the last time I recorded stock levels sort of hitting these heights was roughly around the correction of the 2017-2018 period, where Cherrybrook had corrected roughly 6.6%. So again, this is, and I guess just to further clarify that, if you want to cross-check and verify as well, by all means, if you have a look at real estate, they have a suburb profile analysis, and you'll notice that the average page visits per month in Cherrybrook was sitting at 798 page visits, with the New South Wales average sitting at 1,325. So, Cherrybrook was monstering, the page visits per month, but that has come off to an average demand market. We used to be a very high buyer demand market. So again, another key indication that's showing me that things have started to cool. Now, is it all bad news? No, I think it's a stability that, I guess it's to be expected. There hits a point where the average household income in proportion to property values really starts to distort. And I think Cherrybrook, what we witnessed last year over a 6 to 7 month period, was a phenomenal boom. And not just Cherrybrook, it happened a lot of other places where, we'd grown around 33% over such a short span of time. So that's something to consider. And I guess the key with any transaction is looking at your changeover price. It's not all bad news, because when you're selling, you're obviously going to improve your changeover price when you're buying elsewhere. Because again, I haven't looked at the data of other suburbs. I know there's other suburbs just off the top of my head that are performing quite well, and others that have tapered off too. So I think it's only a matter of time till, things, I guess suburbs perform differently. I think when a suburb becomes very expensive, people start to look elsewhere. Then when that suburb becomes expensive, they start to re-emerge and enter the suburbs like Cherrybrook and that sort of thing. So something to keep in mind there. Now, as far as the rental market is concerned, nothing has changed from when from last month. Based on the average of 196 rentals over the 12-month period, the median is sitting at around 780 per week, which is sitting at around a 2% yield. So I guess just to summarize, you can see that the property market has well and truly cooled. No surprises there. It'll be interesting to see how the rest of the year plays out. Now, the other thing I just wanted to quickly touch on as well was how do I think this Russia-Ukraine conflict will impact and affect us here in Australia. Now, I'm not an economist in any shape. I mean, you've asked for my opinion, so I'll give it in its opinion, and it is just that. But I think it would be very naive of us to think that, hey, we don't trade with Russia, so it won't, we haven't got any direct trade relationships with Russia. So I'm not going to say any, because that's wrong. I think there are a couple, but very minuscule in the grand scheme of things. So I guess what I am, and I guess this is a big call, but I am expecting inflation where, at present, we're currently sitting at roughly 3.5% as a nation. And it wouldn't surprise me if we hit as high as 10%. And I know that sounds drastic, and it's like, well, what makes you say that? I think the thing we've got to remember here is, I guess we can sugarcoat the Russia-Ukraine situation, but ultimately this is a war, right? And, never in our, in our generation now, have we seen something, sanctions that have been imposed as strictly as this. And, they're currently, the thing, Russia, Ukraine are very big, they produce significant levels for the global economy, things, gas, oil, wheat, which we all rely upon, right? So I think, if you look at the based on those commodities, assuming that these supplies are cut off from the Western world, right? You're going to see, we're going to witness, I would think, an energy and food crisis. In turn, this is obviously going to, the RBA, because originally, before this all happened, there were talks of the RBA holding low interest rates up until 2023, perhaps even 2024. The RBA now are going to have to force their hand to lift, the interest rates sooner than they would have anticipated to try to prevent inflation. But, they're not going to lift it to a level that, not nearly enough to prevent inflation, because if they do that, we're going to enter a recession. So this is where it becomes a fine tuning balancing act. So, I'm sort of tipping an energy and food crisis. How does that affect real estate? I think the one thing that real estate has proven time and time again is the importance of tangible assets, real assets, right? And I think holding on to a tangible asset such as real estate is, in times like these, is probably one of the best investments or securities a person can have. And I guess the key here is, though, don't go overboard on taking on debt if you're looking to buy. In saying that, I think you'll find banks will impose restrictions that will create a buffer to prevent us from entering recession, which means borrowing capacity is naturally going to decline. In turn, leaving the property market as I guess, depending on the suburb you're in. So I guess what I'm getting at here is real estate. If you're looking to transact in real estate, this is another measure I think you'll find that will put the property market in cooling conditions. Now, I guess from that, how far will it correct? Again, suburb specific. I think, I say this time and time again, and I'll say it before, it depends on how well established a market is. So I think you've got to remember, here in Cherrybrook, a suburb full of baby boomers, property market hits $1, right? Their house is worth $1. They don't need to sell, they'll hold on to it and wait for the next boom to come in, and there won't be any problems, right? So an asset, it only becomes, when you're looking at an asset in financial terms, it's only when you sell it, it becomes measurable, right? So being a suburb where there's real low mortgage stress, I think you'll find that there won't be an influx of properties in Cherrybrook that are looking to sell. Could be different in other suburbs. Some there'll be more, others will be less, really depends. But I think this is where you'll find, we've never been in a situation like this, so it's very hard to speculate. So this is just my opinion. Obviously open for feedback, and I'd love to hear what all, the rest of you think as well. And I hope I haven't waffled on too much, because I do lose my train of thought at times. The mind's ticking. I want to say things, but I hope what I've said has somewhat made sense. And I guess, where do we go from this? Like I said, it's not all doom and gloom, because on the flip side, there's all talks of, well, hold on, we haven't even spoken about immigration, which is going to bolster and boost the economy. The shortage of raw materials that have put the average costs up on building, new dwellings, which is forcing people to buy the existing ones, slower construction starts. So there's all these elements as well in the background that I think, we, as a country, as a nation, we have up our sleeves to, bring on the next wave, the next boom. So how long this goes for, I don't know. I don't have experience in this field. It's a war, essentially. I'm just speculating. That's what I can see happening just when you start to put all the analytics together. But without a doubt, and going back, just keeping it local to Cherrybrook here, I think the key is, if you're looking to buy, now's a great opportunity. Things have definitely slowed. You would have seen this going to inspections. You would have seen this going to auctions. You would have seen auctions passing in. You would have seen, it's no surprise, you're seeing it firsthand. And I guess if you're a seller, what you need to understand is, well, hey, what was happening last year, you may not get those prices. You may, it depends. There's always someone out there that loves a home and is willing to pay more for it, above market value. That's always going to happen. But I guess broadly speaking, you want to look at your changeover price. So where you're looking to buy, I think you'll find that, don't sit there thinking, hey, because my property's got depreciated in value, I'm not going to be able to facilitate and make the move as to where I'm looking to buy. You need to understand that the place you're looking to buy is probably in its correction cycle as well. And if it's not, and you don't need to sell, just hold on, right? So I hope that sums things up. Sorry if I waffled and went on too long. There was a bit to cover, and I just sort of wanted to explain my view on the Russia-Ukraine and the impact it's going to have here. Again, it's only opinion. Like I said, I'm not an economist or anything that, and I'd love to hear from you professionals out there to see what your take on it is. So again, Angelo, Director of Lambros Realty, thank you again for tuning in. If you have any questions or, with this YouTube video, please leave them in the comments section. I'll endeavor to sort of answer any questions I can. If, need any real estate assistance or anything like that, give me a call. Angelo here at Lambros Realty, up there. 0294810999, or you can email me on info@lambrosrealty.com.au, or visit me at the office here at Apple Tree Shops, Cherrybrook. Okay, take care of yourselves, and I'll see you next month.